Hello, my name is Steve Bigelow with the Candlestick Forum. The markets are awfully strong, and that's based upon the patterns that the Dow and the NASDAQ have been illustrating to tell us that the bulls are definitely in control. The Dow has come out of this wedge formation, and notice how it did it. It gapped up through the resistance level. This was after some hammer signals last week that bounced up off the 50, then gapped up through the T-line showing strength. The additional strength was on Wednesday, gapping up through that the top of the wedge formation, implying there's a lot more upside. Same scenario on the NASDAQ. Notice how it did kind of a bullish Doji sandwich with a Doji gap up through the resistance level, with this uptrend implying the next target is going to be the top of the trend. This provides much better probabilities that this uptrend is going to continue. These breakout situations we can take advantage of knowing what type of signals are occurring at a breakout situation. We started getting into apps as we can see the Doji sandwich breaking out through this level, making wave 1, wave 2, going into wave 3. And it has resulted very well. Their earnings are good, been producing big profits. The major advantage that keeps being illustrated by these patterns that we point out is the fact that not only are we going to be in the right direction at the right time, but the magnitude of the move is usually going to be a heck of a lot better than just merely uptrending stocks during an uptrending market. When you're using signals and gaps, you gain a huge advantage. A lot of investment advisors say stay away from gaps. You don't know what they're doing with the price. When you know what's going on with a candlestick signal and they gap it up through resistance levels, our recommendation a couple of weeks ago on DIX was that best friend Doji gap up through this resistance level produced a good up move. We recommended our Ranger a few days ago. Again, a Doji gap up off the 50-day moving average through the resistance level, putting us into wave 3. Tomorrow we'll probably be buying Freeport. Same scenario. Wave 3 is usually the same magnitude as wave 1. Using candlestick signals, which we can illustrate what is going on in investor sentiment, and then utilizing the gaps that follow it, tell us exactly what's happened after that investor sentiment change. There was a kicker signal in our recommendation on plug the other day. Notice how it did a hammer type signal, in this case right off the 34, but when they brought it back up on a kicker signal through this level, we were in an uptrend. Today they gapped it up again through this level, making the prospects of a wave 3 with the strength that's illustrated in these in this reversal, giving us much more upside. And using gaps also help illustrate when we're breaking out of a recognized pattern, like the fry pan bottom. We got into Riot a couple days ago based upon the breakout, and then you can see the formation, the fry pan bottom. And this is the type of price move that it creates for us. And I think after hours, they reported earnings, and they're even trading higher. So the whole point of this illustration of these strong price moves is to demonstrate that when you see a pattern and then you see gap breakouts after a signal, the probabilities are pretty strong that not only are you going to be in the right direction, but you're going to be in a very strong direction. That'll be it. We'll see you in the chat rooms. We can anticipate we're still got more upside with this wedge breakout of the Dow. Good trading. We'll see you in the chat rooms.